Good afternoon. This is Clark Neighbors with BIS Commodities with the market update for the week of August 23rd, 2013. Interesting week with rallies in the grains led by the soy complex. I'll touch on that in a second. Also Friday afternoon, Pro Farmer announced their production updates for the tour this week. They just came out a little while ago. 13.46 billion on the corn crop, which is a 154.1 yield. Beans, 3.15 with a 41.8 bushel yield. Interestingly enough, it looked like by the state breakdowns during the week, most of the states were actually at or above the USDA estimates on a state-by-state breakdown. Final number actually coming in a little below from a yield perspective of the state-by-state breakdown. And it also looks like maybe about a 2 million acre decrease in the harvested acres, which could take into account some of the prevent plant. If we hear more details on that, we'll let you know. But keep in mind, 7 of the last 11 years they've underestimated the final yield on corn, and or 8 of the last 11 on corn and 7 of the last 11 on beans. So keep that in mind as we go along. Again, the driving story this week was the soy complex. Beans up 70 cents on the week on the new crop. That's up almost $1.60 or $1.70 off recent lows in the last 2 weeks. Charts look very good. November beans tested the June high, took it out at one point here on Friday. That high around 13.30. Didn't see any additional momentum at that time. Fell back a touch on the close, but still a very strong week on the bean complex. December corn up 7 cents on the week, and December wheat up about 2. So obviously the corn market and the wheat market are laggards in comparison to the bean complex. Another thing, interestingly enough, on corn, seasonality on corn starting August 26th. Through about the 18th of September, December corn has went lower 13 of the last 15 years. Be interesting to see if that follows through. In regards to the markets this week, the momentum of the soybeans was carried a lot by not only the dryness we've seen here of late over the last 2 weeks, but also the anticipation of a crop being behind. So we've added a fair amount of weather premium back in this bean complex. Corn, as it may, try to do the same thing early in this move, but in talking to a lot of people, it seems as though most are comfortable with the corn crop, depending on where you're at. Could shave the yield some because of dryness, and barring an early into the growing season, most feel fairly comfortable with the corn crop hanging in at levels it's at or better. Some areas of the Midwest, mainly in the northern sections, receive some rains here mid to late week, which obviously will help immensely in those areas. A good chunk of the Corn Belt, more in the western and southern areas, did not see as much rain, so we still have what's perceived to be a need for some rain, especially in the soybeans. If you drive back, if you go back to the 1st of August, things look really good. Here we are towards the end of August. Things are kind of holding together, and we've had a fairly dry August, and that's what the market's reacted to. During this week, for business, I was on the road through a pretty good chunk of Illinois, Peoria, Decatur, Springfield, on down towards St. Louis, back up towards Quincy, Hannibal, Missouri, and on back to Cedar Rapids. As a whole, most that I visited felt fairly comfortable with their corn crop. You do see some inconsistency in the crop. You do see a crop that has a ways to go from a maturity standpoint, and what amazed me a little more is the maturity in the southern part of Illinois seemed to have a little better color and a little better life to it than some of the corn maybe in parts of eastern Iowa and parts of western or central Illinois. So it'll be interesting to see how this progress goes through. As we go home here on a Friday night, looking for a fairly dry and warm weather next week. 2 ways of looking at that. If you're looking for some rains, you'd like to see some rain, and it doesn't look like there's much in the forecast, at least at this time. but the warmer weather ought to build some of the maturity and bring this crop along a little quicker. The theme in this market still is the title crop stocks and the basis that continues to be very, very strong. We've had little ebbs and flows in that during the summer months between delivery and some times where we think basis is going to finally make that transition. And I'll talk just a touch more on that in a second. And the other driving force, especially on the trip this week and talking to folks in the commercial side, is just a lack, an unbelievable lack of new crop sales by the producer. Most would tell you in a country elevator right now, the farmer has sold less than 10% of his corn crop and less than 10% of his bean crop, and I would almost say that 10% is the high water mark in most instances. Basis got strong again this week, led by both the corn and beans. You're seeing some very stellar numbers, robust numbers, if you will, into the processor market. We have a week to go before deliveries against the September futures, which will be interesting. At this point, obviously, no deliveries would be expected. There is corn moving north by barge, there is corn moving north by rail, but the conversation is the southern crop is very good. It's wet, the Delta and southern crop, that is. A fair amount of that corn is trying to come north. Reports in Mississippi of 200 bushel corn because of the cool summer. So there is a supply to come north, but it's not coming quite as quickly as what the end user in the north would like to see. Basis levels, obviously being stronger, have had some pretty major impact on the SEPD's corn spread this week, as this moved nearly 20 cents since the early part of the week. So again, as we go into deliveries next week, it's going to be interesting to watch that basis. In some markets right now, you have almost a $2 premium on cash corn versus full harvest time corn. So for producers that may be holding old crop out there, there's a huge cliff to fall off of at some point as we approach that new crop, so keep that in mind. And ties that in with the new crop sales. It'll be interesting to watch as we get closer to harvest, or in the early part of harvest, how much movement we see. Our anticipation is we don't see much movement, and thus those fall basis levels might actually improve, at least in the early part of harvest. The other thing to keep in mind in this huge move in the soybeans over the last 2 weeks, the timing of that is very relevant because it could create a lot more bean planting in South America. The ratio right now on beans to corn is 2.8 to 1, which is a record. That entices the South American producer to be even more aggressive in bean planting, and we have seen pretty good bean sales made, from what I understand, this week in Brazil. Keep in mind, as the market goes higher, they're going to take advantage of that. They're also seeing the real, or the currency, dive a lot during this time frame, thus creating a bean complex equivalent of $16 to $17 beans for the Brazilian producer. So it's going to be interesting to watch, where we are with the supply of U.S. beans, which right now we do not know, but the impact that could have further down the road on South American production. So the lack of new crop sales, old crop stocks are tied, and then late growing season weather, which 2-3 weeks ago, other than getting through the September time frame without a frost, which that story is still potentially out there. Rain would certainly help solidify a lot of the crop in the Midwest. Is still looks like it's pretty good, but a rain sure would help solidify that. Cattle on feed reports this afternoon. On feed for the month of July was 94% from a year ago, slightly lower than what the trade was looking for. Placements well below what the trade was looking for at 90%. Marketing's at 105. That could create a little bit stronger cattle market on Monday. Very quiet on the cash cattle this week. Dollar this week was unchanged. Stock market, the Dow Jones is down about 100 points on the week. Energies, crude down $1. This is after last month reaching 28-month highs back in July. One interesting note on the energies, I noticed earlier today, Department of Energy is estimating gas demand in 2015, which obviously is a year out, at 131 billion gallons for the year. That's down 25 billion gallons from 2005. The ag significance of that is this: that's down 16%. 131 billion gallons would basically equate to 13.1 billion gallons of ethanol demand, when we have an industry, or a structured industry, ready to make 15 billion gallons a year. So interesting to watch, because as we've heard many times, this gasoline demand is starting to back up a little bit. Some of this may be economic, but a lot's due to more fuel efficient automobiles. Again, the three things that stand out: one, we still are questioning supply, we still have ways to go. So the weather, lack of new crop sales is still key. But the next week, the final week of August, I think the highlight, unless we have some more weather issues, we'll be watching this cash market, watching basis levels, and see how that transpires as we try to get closer to harvest. Most places I talked to this week on my travels didn't think they'd see much of any harvest prior to the 1st of October. Some of that may change due to how big inversions are in the market and what type of drying rates we see. If you have any questions, call us BIS Commodities. Phone number is 800-373-2525, or biscommodities.com, or on Twitter account on BIS_commodities. Thank you, and have a great weekend.